Now that you're clued into the armpit trade, seeing where it doesn't quite come down to this support level before going up a little and breaking lower, let's go a little deeper. This is moving average, giving you a look that the trend has changed, but you were able to identify this early over here, allowing you to buy at a higher high before going lower, giving you this much more potential profit. The moving average is a great line, and some people even trade it higher as a bounce of support. The problem for me is which one to use, the pink one, the green. There's just so many to choose from. So instead of picking one, I want to clue you in on the 45-degree line. A lot of times 45 degrees are great areas of support and resistance, showing you where the breakout is. So instead of using a moving average to tell you when the trend has reversed, you can use your line tool, start at your support as a horizontal line, then take your lowest low to your next higher low, draw a line up, and again. And if you notice, the angle is only 31, not quite 45 yet. And you keep moving your trend lines up from the previous low to the next higher low until you get a 45-degree angle, like here. So what do you see? You see support lines, and then you see the armpit trade, knowing that you're coming into a resistance area before the trend starts slowing down, selling off. What would you expect? You'd expect it to come back down to a support level. So when you identify the armpit, you could draw a 45-degree angle up to create a new resistance line. Once price breaks below that, trend reverses and sells off. I call this the wave strategy. You take across the bottom lows and you keep bringing it up. That's your support level as price increases on the Elliott wave. After you break below a 45-degree angle, that is the perfect place to enter into a trade. And you use that by identifying your armpit area. And why do I call this the armpit area? Because this is the body, and here would be the armpit. Then I'm referring to this as the arm. I know, kind of strange, just the way I saw it. So when you see a downtrend at support, gets that breakout, you first start a horizontal line, then you come across your higher low, and you keep going up. Right there is a 39-degree angle, meaning it's not quite the 45 to give us the entry point. And also what happens, you get the armpit because it doesn't come down to the price for support. So from this point, you go up 45% right here, just under 46, gives you a great breakout point. Right here, we see price come back and retest, but making lower highs. We also see the plateau with the high, then the lower highs. We also see the plateau on this side of the trade, and then price sells off from where we sold. And it all started identifying this area where it didn't come down to support, but gave an impulse wave higher. Another thing we see based on our trading system is into resistance. Resistance, resistance, resistance. So if you were able to get in at the highest high, then this should just be a confirmation to you. Price is getting ready to sell off lower. Start at the bottom with a horizontal line, have a little bit of a degree. This one's at 5, this one's at 14. What do we have here? An armpit. So now we can draw a line up at a 45-degree angle. Take from the lows, bring it up, gives you a 45-degree angle, which is support. And that's why we see that little doji right there, because in decision of what to do on this trade. So if we got in at resistance, breaks our 45-degree line off of the armpit, then sells off lower. Start at the bottom, and you're only going to have a small degree difference as you bring it across the higher lows. Right here, doesn't come down to support. Take from the low up, bring your 45-degree angle, shows you where to get into the trade right here as price goes lower. Again, you can enter the trade here, or if you got in at resistance, you could use it as a confirmation of a trend change. Same ticker, come out flat, make it a little higher. If you were taking this trade to the upside, this would give you a great confirmation of where to double down or enter into the trade higher. Keep crumbling across the bottoms. This one's only 27% angle. Gives you an armpit right here because it didn't come back down to support. Giving you a 45-degree angle where to enter into the trade, or showing you where the trend has turned. And this doesn't always work out. As we can see, price even went higher. So where do you start again? Take from your lows, draw across. Do you see here we didn't come down to support, meaning we're in exhaustion. Price should reverse from here and go lower. Here we go again, straight out flat, giving you your support level. Take from your lows up to your higher lows and keep drawing lines until you see your armpit. 45-degree angle up, broke right here, retested right here, which makes sense to us because we see this resistance level, and then price sells off. Same ticker, horizontal support, bring it up. We only have an angle of 24 degrees. We have an armpit right here, 45-degree angle. As you can see right here with some horizontal resistance, you could look at entering the trade here off this lower high, maybe double down at this diagonal line, or wait for price to break below that 45-degree line, come back and retest, then enter here. The system's up to you. Just giving you another view of technical analysis. So if you ever see me draw lines like this, you'll understand it's the wave pattern.